Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday. It's March 29th. This will be our chart lesson for the day. And you can see on the daily chart, it looks like a hugely bullish day, but it's kind of an interesting day. Most of this movement came in the overnight, and the rest of it came late this afternoon. And during the middle of the day, the market just sideways with no direction. So that leads me to believe that they're using the low volatility of the after hours and late afternoons to move the market higher. Is that sustainable? I don't know. We'll just have to see. A market that can't go down is going to go up, and you can see we tried to breach that midline twice, 2 days in a row, and couldn't. So today we tried started off down there again today and moved higher. So we'll see what tomorrow brings. But this looks really bullish on the daily chart. And of course, it is a bullish day because we closed way up from where we were yesterday. But if you look at how they moved the prices higher, it looks suspect because, as I said, let's just flip over there and I'll show it to you. And here's our chart. You can see it's like a spike up like this that goes into the channel should be a much steeper channel than this. And this is just mostly sideways. You don't really need this green channel on there. It's valid. You can see prices playing off the midline, off the trend line, and then turning down up here at the highs. This doesn't really help you a whole lot other than to know there's a slight upward bias here. But you can see most of the upper movement came during the overnight, and then it was mostly all sideways. We started rallying right here about 1 o'clock, and they took it higher late this afternoon. So and again, they took it in spurts, like it just some buying comes in spurts, and as soon as the buying runs out, it starts dropping again. And so somebody's doing some buying. It's just hard to know what this market's going to do. Uh, but anyway, there's what it looks like. I don't think you need this trend channel. I think you're better off to play this sideways stuff. And you can see we were in this sideways channel. We broke out. We moved exact measured move, came back up, tried to break out here, failed, turned down, tried to break out the bottom, failed, and then went higher. So anyway, there's a look at it. Let's zoom in here and go through the trades, and we'll wrap this day up. You just had to pretty much sit this out here. I mean, this is kind of ridiculous almost here. This is like the old days almost. But anyway, early on we had this strong trend coming up. We had a break, couple legs up, then we're moving down. You get a break, couple legs down. I marked this. Maybe you buy this right here. Um, I'm not crazy about it. It's not a lot of room back to the EMA, but you got two legs down here pretty much, and then it kind of turns up, and you can clearly see this channel played out. So it might be worth risking. I'd wait. That early in the morning, I'd wait for something better than that. And when you did, you had to be really patient, basically. So, and then we took off here. I mean, that just really takes off, shoots straight up, and then we're just chopping sideways again. Um, I don't know if this almost looks like somebody taking profit taking as it's going higher. This big move up, and then all of a sudden as it moves higher, they start selling. So maybe it's some profit taking from all this buying right here. I don't know. It's kind of odd price action. Um, there wasn't any news at this item at this time. The news didn't come out till 9 o'clock. And it's not really, it's just pending home sales, so it's not really that critical. So I don't know it's just real strange price action, really. So it just looks like a lot of heavy selling into this price level here. But anyway, you run up here and you get two legs up and way away from the EMA. It's a second entry short. Maybe you take that trade. I marked it green. You really need to wait on a lower high, which comes here. So I like that trade. Then you get a reversal here right off. It confirms the trend line at the same time. Still plenty of room back to the lows here. Usually you got to be careful in this midline, but you got this channel working down here that kind of helps you out. So it was worth trying to play that, in my opinion. Maybe not the reversal here. You really need to be a super skilled trader to trade that. And you wouldn't have even had the yellow one at this point. It wouldn't have occurred till you got this swing here. So as you see, it looks pretty good right there. Looks like we're headed lower, probably to the other, back down to the low side. So anyway, and we do break out lower here, and this confirmed the trend line. Then you get a little double top, and that's also a second entry short right there. So if we break below that, you probably get a scalp as long as you got room to this low. Otherwise, I may not take that just because it's at the lows of what's been strong support there. But if you got room to get out before this low, it's probably worth taking. You'll get that. You'll probably get a scalp. And then of course we drop down really strongly. You get a first entry long, second entry long, and it fails. So again, if you got room there, I'd probably take that. And you can see that kind of bottoms it out there. We do get a break here, move to a new low, a perfect measured move. And that's the other thing. Once you started breaking lower here and moving lower, I'd look for that measured move and assume that's probably our target. And there was another reason to be thinking short here too that I forgot to talk about. You can see where we opened at 8:30 this morning is right here. And on the intraday chart, yesterday's chart, the low was right here, or the high was right here. So there's going to be a gap between that point and this opening that they usually try to fill. Maybe tomorrow, maybe a couple of days, but eventually you watch will fill. It's usually the same day. And once you fill that target, a secondary target is the high during regular trading hours, which would have been here, and the other one is the close from the previous day. A lot of times you'll continue on and retest that too. I mean, you could just start trending down for the whole day, but those would be targets that you would look for on the way down, starting with this one, and then whichever one is next, either the close from the previous day or the high, which sometimes they're the same point. But that would have been something that, you would assume that's probably what we're trying to do here. At least make a measured move based on the width of this range and maybe fill this gap. But you can see once we filled that, we were going higher. And you can see there's a second entry long right there. New high, first entry, second. Clearly two legs back to the EMA and a possible trend line that it confirms. Nice signal bar. I like that trade. There's a higher low here, but we just turned back down off that resistance, so I'm not crazy about entering there. This looks a little congested. Full bar, no body, full bar, again, no body. Your signal bar has no body really, so that's kind of suspect. So just hold off on that. But it does run up here and you get a double test back inside the range and a nice signal bar. So, and it's right off the EMA and the trend line. So there's a lot of support right behind you there. So even though that's the first entry, maybe you assume that's getting you back in the range and we're going to go higher and you take that trade. It's a little aggressive. It's a little more advanced. So be careful with that one. But we do get a break, move to a new high, and then we come down. You get this trend working down. You get a break, new low, and you get a triple test right there and a nice reversal type signal bar. And let me zoom in here. I always forget that sometimes people can't see this really well. And I like going long here. And this is a great example of why we put our signal bar where we put it. Notice how they tried to test that with two more bars and could not breach that low point. That's why we put our safety stop where we put it. Because if you'd have put it anywhere else in that bar, you'd have got stopped out. Here, they tried to get those stops and couldn't. And they were protected and prices went higher and you don't get stopped out. So that's a great second entry, but more than anything, it's a great example of why we put our signal bar. Somebody might say, well, why didn't you go long again here? It's mostly bullish, but there's no body there. But by the time you get three bars stacked side by side, and two of them have no body or very tiny body, so it's a little risky going short there versus here. Normally this would take on off like this did, but it didn't this time. They tried to get those stops first, couldn't get them, and then it went higher. and then we just kind of chopped around up here, and you get a little failed breakout. I like this one just because this is you got to figure this is going to fail on the main breakout, but you also have a secondary breakout that's probably going to fail right here. A good bit away from the EMA. A lot of times these turn out to be important highs or lows, so I like that one. And boom, we're running down. You do get a close outside and a new low, and you get the same thing again, a failed breakout on this side. Now I only mark this one green. Again, you're usually better off waiting on a higher low, which you just don't get, just like you didn't get a lower high over here. But I mark this one green just simply because there's not enough evidence to say we're going to break out. Notice we tried to go higher and higher and higher, and then you went down. And even though that reverses, it could easily tick up and touch that support line and turn to resistance and turn back down for another leg. So I'm really weary of that one. It's real close. Again, it's a little bit sideways, so you could almost treat it like a failed break lower. But we'd already kind of broken out of there, and so this could be a bigger range is basically what I guess how I should explain it. This may not be support. This may be a midline, and that's probably what it is. This is probably a midline now, so you don't know what's going to happen on this midline. You got to let it kind of play out. And so it's a little more dangerous going long right there versus going short up there. That's because I know somebody will ask me the difference in those. And this thing just takes off, and you just get a first entry right there. No chance to get in that. But notice you get a new swing low here, and you get a first entry, second entry, and it's back here at the highs. And so now we may be headed up to this high. You got to be careful on these breakouts. But the fact that that's a failure, it's real advanced. I marked it green because that could fail on even a skilled trader. I could be wrong if I read that in real time. You easily could. So you got to be careful with those. Most of you don't even want to fool with those. It's somebody every day almost sends me a failed second entry or a failed second entry they think is a reversal, and they can't figure out why it failed. Well, it's because you don't understand enough about them. You're not skilled enough to be trading them to begin with, so they're confusing. They're hard. They fail. They're even skilled traders that trade them will have some failures. You're just gonna have some failures on them, and most of you would be better served staying away from them until you become a better trader, until you got a lot more experience. And I mean, when I say that, I mean you need to have been making money for a couple of years probably to be trading those things. Otherwise, you're just setting yourself up for failure. So anyway, second entry long here, right off the key entry point, high or low on top of that. I don't know. This one's special too, so I really want to mark this green, but I like this one taking it on the engulfing bar because that's where the second entry triggered. And it's a really nice bar that I wouldn't be afraid to go long above even after it closed. However, it had two more bars in a row, and they couldn't break above it. So that's a little scary, especially when this one ended as a doji, because now you got 3 or 4 bars stacked in a row there. A couple of them have no body or a very tiny body. That's congestion. So this higher low, though, makes this a failure. So maybe you still go long there above that, trading it as a failure. And you can see it acted as one too. Look how, boom, it rockets up. So again, if you're not really skilled, you'd probably only trade this as an engulfing bar. And even then, you probably wouldn't trade it because I try to tell people if you're not real skilled, don't even trade engulfing bars. Wait till they close. And so most of you probably shouldn't take this trade. Most of you should just let this one go. And when you do, and then you see that, and you say, "I knew I should have taken that trade," but you can't do that because this is a somewhat risky trade, and it just because it worked out this time doesn't mean it'll work out next time. And what'll happen is you'll skip one like this, and next time it works, so then the next time you see it, you'll take it. The next several times you see it, you'll take it, and they'll all be losers. So you can't let a mistrade mess with you mentally, because so much of what we do as traders is mental, and you have to understand that. So you've got to learn that you don't chase trades, you don't get mad at the market, you don't get mad at yourself, you don't get mad at trades. You don't look. The more importantly, you don't look back at trades. Once you've skipped a trade, it don't matter what happens. Don't look back at it. It doesn't matter. If you skip this trade because it wasn't 100% sure, just because it took off doesn't mean you were wrong. It means you still did the right thing if you weren't 100%. If you're not 100% sure a trade's going to be a winner in your mind, then you probably shouldn't be taking it. Now, let me paraphrase that or give you a caveat to that. If you can't be at the same time, uh, you need to be disciplined and very picky. You can't be trigger shy. You can't just be scared to pull the trigger because you'll miss too many good trades doing that. So the key is the trade. If you wait on the best perfect setups, you can't hardly go wrong. This is not a great perfect setup because it's got an engulfing bar on the second entry trigger. It's got congestion, so this is not a perfect trade. Now, when somewhere back here there was a second entry that was probably a perfect trade. I'd almost call this one because it's a triple test. It's a second entry long. It's a great signal bar. There's plenty of room back to the EMA. It's way below the EMA, so it's time to snap back. And notice you couldn't get stopped out on it. Prices tried to run those stops and couldn't. That's almost a perfect setup. Here's a perfect short over here. It's a second entry with a little double top trap on top of that. New low, first entry, right off a key entry point, right off the EMA. The only thing that keeps that from being an ideal trade is that maybe it's because you got that support there. But you can see we'd already breached that and failed and still couldn't get through that trend line or EMA and look how bearish that is. That's a good sign you're going to at least get a scalp out of it. So learn the difference between a really good, almost perfect setup and one that's not so good, still but takes off like a rocket. You got to be able to decipher the difference between them. So anyway, we were hoping you're looking for a measured leg up here. You didn't quite get it. Here's your little two-legged correction after the first leg up. And this one took all day and it still couldn't get there. We got close, but not quite a measured move. But that was probably the target. This would have been my first target, the measured move based on this range. That's what this dash line. We made it on the low side to the tick. Didn't quite. I mean, couldn't quite get there early on. Then when we did, we kind of surpassed it. But you can see it turned into support as well. And now we're kind of turning down. But anyway, there it is for today. That's how I saw it. It's not the easiest trading. You got a pretty good trend right here. And you had a pretty good trend here, but there weren't a lot of setups on it. And the rest of it, you had to really play the ranges or one of the trends otherwise. So you just had to kind of sit tight and wait for things to happen this morning. You had to wait till almost 9:30 before you had something decent this morning, or 9 o'clock anyway. So just one of those days. And it was a huge bullish day in the big scheme of things. But as I talked about while we were looking at the daily chart, it's really not. It's kind of deceiving because all the movement came during the overnight when the volume's very low. And then we just mostly went sideways until late afternoon. Some buying came in about 3 different spurts, and we kind of lunged higher. And that's the only way I know to describe that because we're not really trending nicely and smoothly. We just kind of get these spurts and then sideways, spurts and then sideways correction, spurt correction. It spurts up and then it just corrects and goes sideways. But that's how it does. These big institutions do not buy consistently. They might somebody might have had a buy order, or it could be dump some stock order, so they may be buying with a loss here if it goes higher. We don't know exactly why they're buying, but some institution is coming in and buying big chunks here for some reason. Are they buying because they think we're going higher and loading up, or are they buying because they think they were wrong on the short, or maybe they're taking profits from being short somewhere lower and they don't want to give it all back? We don't know exactly why they're buying, but somebody came in here in 3 different spurts and bought. And when there's big, huge buying by an institution, they can't buy it all at one time or they'll pay double for it. So they buy and then let the market fall back again and buy a little more. And, they have to buy higher, but they don't have to keep buying sky high and running the market sky high. So that's kind of how their technique is. They'll buy in chunks, then they'll buy another little chunk, and then they'll buy another little chunk. So somebody's buying there. It's just like right here. Either there's a lot of short covering going on right here, or somebody's buying. So because the buyers are way overwhelming the sellers here. Every one of these spurts, you're getting buyers that are overwhelming the sellers, and we go higher. So anyway, that's going to do it for today. I'm going to wrap it up. We'll be back and wrap up our week tomorrow. I will tell you now, there's not going to be a chart lesson on Monday. I'm probably not even going to come in Monday. Unfortunately, I think I've talked about I've had some issues with some skin cancer, and now they've found a spot on my ear, and I've got to go have that removed. And because it's in my ear and down into the cartilage of my ear, they're either got to cut my ear off or I've got to do it a different way. So I'm going to some specialist that supposedly can take care of this for me. So, I thought about whether I should share with you exactly what's going on, but I've got some skin cancer problems going on from years of being in the sun, my fishing and golfing and things like that. So, you think you're young and invincible. And I remember my mom was saying, put on your sunscreen, wear your hats. And I laughed at her. And now I wish I'd listened to her because she was right. So I'm paying the price for it today. But I've had I've already had a piece removed from my chest back several months ago, and I'm clean on that. And I've got a clean checkout so far, other than this spot on my ear. And they did a little bit on my nose. They took a little tiny piece off my nose. Luckily, it didn't. I'm not going to be scarred or anything. I've had an accident with my nose once before where it was almost severed completely off my face, and I had a wonderful um, plastic surgeon that put it back together with hardly even any scars on my face. So I feel blessed already about my nose. So when they found this little spot, they were able to laser it off here locally. But I'm having to go to a specialist for this ear thing because they said if they do it here, I'm going to lose part of my ear. And I'd rather not do that if I don't have to. So anyway, that's where I stand. Won't be here Monday for that reason. And but we'll be back at it Tuesday. So I apologize that I won't be here Monday, but I got to take care of my health first. So anyway, I hope everybody. I'll be back tomorrow, so we'll see you tomorrow. I'm just trying to give you a heads up, so in case I forget about it and forget to tell you, and then you wonder what's going on Monday when I'm not around. So, but anyway, hope you had a good trading day. We'll be back again to do it tomorrow. We'll wrap up our week, and we'll call it a week until Tuesday of next week, since I'm going to be spending the day in Memphis at the doctor at a specialist on Monday. But anyway, I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.